All right, everyone, here we are with ticker symbol TSLA, Tesla Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Tesla has had a slight recovery after being in a very bearish run. I had stated yesterday if it broke through support, this would start to see newer lows and get into bearish territory. And honestly, the bulls have recovered this one, bringing it back up in an upward direction, keeping it above the 50-day moving average. And for this momentum to continue, the bulls need to continue to load up on stocks and continue the momentum. So let's go ahead and move this to their new locations so that we can see what is important for tomorrow. And let's go ahead and see our new resistance levels and supports. So we're looking at this very narrow, and I will talk about it a little bit broader as I zoom in and get everything landing on its right point so we can see what's important again for Monday. So as of right now, the resistance is here. We are at 433.87 and we're going to see this broader. So down here is one of the first leveling offs, fairly close to the 50-day moving average, and I want to mention it because it is important. That's how this leveled off and continued the run, and that is 427.83. If that gets crossed, this could start to see newer lows and get deeper into bearish territory, so keep that in mind. And the highest point before the bearish run of falling, it was at 434.86. That's not that far from the resistance level we're about to look at, so keep that number in mind as well. But you can just kind of use the resistance level that I'm about to talk about as a point of reference. The most important one is this peak up here at 438.55. You want to write that down. That is one of the most important resistance levels right now in the short term and in the last couple of days, being the highest point before this bearish run and this slight recovery we're in right now. So let's zoom in and see what's important for Monday. So 50-day moving average is 431.63. Very important number. At 431.63, it lets us know where we're at. That's our 50-day moving average right now. If we're above it, we're in bullish territory, and if we're below it, we are in bearish territory. As of right now, we're in bullish territory, and that lets us know that the bulls are gaining control, or at least maintaining control, because this is a very close one. The volatility could be coming soon next week, and the tug of war will be interesting between the bulls and the bears. But as of right now, the bulls are maintaining control. For the bulls to maintain this momentum and control, they need to break through resistance, and that's 434.79. They need to break through it, turn that into a support, and break away from it in an upward direction, further away from the 50-day moving average of 431.63, and in an upward direction to go ahead and reach newer highs and newer resistance levels and start to work themselves deeper into bullish territory. They need to break through this. I want to emphasize that, because if they hang out sideways, this 50-day moving average could start to catch up and get closer to the price after hanging out in a sideways direction. So the bulls need to continue to work their way up, load up on stocks, and bring this one up and break through this resistance, 434.79, and turn that into a support to work their way up to new resistance levels and newer highs. On the other spectrum, we have what the bears want. If the bears get the opportunity to break through this first support level, which is the lowest point in the last couple hours of the day, and this sideways direction that we're in right now, the bears will break through two things: the first support level in bearish territory and the 50-day moving average, getting them into bearish territory to start to gain leverage and control on this chart. After the bulls actually maintaining this momentum, for the bears to come in and destroy it, that would be a sign that the bears are starting to gain control and trying to tear this one down to newer lows. So the support level is 431.57, slightly below the 50-day moving average, indicating that if this gets crossed, we are by default now in bearish territory, and the bears are going to try to tear this one down to newer lows and newer support levels. So I want to emphasize, pay very close attention to how quickly this stock is falling closer to the 50-day moving average And if it breaks through support of 431.57, see for yourself what is going on with your 5-minute, 1-minute, 15-minute charts to see how quickly this is moving in a downward direction, or is it slightly hanging out around that area, and are the bulls even trying to reappear and bring this one up. So I want to emphasize that to every investor. Pay very close attention to the support level of 431.57 and how the stock is behaving if it breaks through it or gets real close to it. All right, thank you guys so much for watching. If you feel encouraged or inclined to subscribe, please do so, but don't forget to click on the bell. By turning on the bell, you turn on all notifications to not miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button and let me know you watch this video, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.